Coming to you live from Vail, Colorado. What's going on, everyone? This is Jordan with Conquer Trading and Investing. If you're new here, welcome. And if you're not, welcome back. In this video today, I'm going to be talking about Bitcoin. I'm going to be talking about crypto winter, the two prevailing theories. And I'm going to help make sure to bring you as much clarity as possible. If you enjoy the content, please go ahead and smash the like button. If you're new here, subscribe to the channel. And make sure to check out the Telegram channel below. Let's get going, everyone. All right, so right now there are two prevailing theories in the market. And I'm not talking about just viewing Bitcoin from a linear perspective or a log perspective. I'm talking about how much longer this crypto winter bear market is going to go on. All right, so I'm going to give you an overview of what exactly both those theories are. And then I'm also going to go down into the technicals and show you what it's going to look like for first signs that potentially we are going to see some type of recovery in the markets. So the mini bears and mini bulls, David, allow me just to go ahead and jump ahead, and then I'll come back to where we are. And I'm not so sure that that is dead. And the reason I say that is we have, two prevailing thoughts right now. And the first thought is that we are, both of them for sure, we're in crypto winter, right? And then one is that, hey, we got the 2024 halving, and most likely not much will be happening into the 2024 halving. It looks like, as we get towards the summer of 2024, we should be getting ready for some type of bull market breakout and then some fireworks into 2025. And that is a theory that could very well take place. Now, if that is the prevailing theory, and it looks more like something like this with the 2024 halving marked over here on the right in March right now, 2024, generally what happens as we get closer to 2023, somewhere in this area, and right now the market is pricing in the Fed actually starting to cut rates in 2023, I believe. You might then see Bitcoin doing Bitcoin things, and not just that Bitcoin and crypto is boring during that stage up into the halving, but normally we start seeing a front running take place before that 2024 halving. Is it possible we have, more or less another 6 months until we enter that particular stage? Very well. I mean, my one concern is also that in 2023, actually things are more difficult than they are right now. And we could see what they like to call a double dip recession. Like maybe this first one that the last I checked last week, the Atlanta Fed was pointing out that we are looking at GDP expectations for this quarter at 0. And if we wind up getting a negative print and then we're in a recession, it could be that, we see these data show in the next couple of months that the inflation's coming off and then the markets rally, and then 2023 could be a lot more pain ahead. If that's happening, I'm not so sure that Bitcoin would act accordingly to this model. Now, the one thing different, that's one view, right? The view is that right now we're in crypto winter, don't expect anything, 2024 halving, that should ignite the next bull market. That's one theory. The other theory remains that we're looking at a new structure take place. That new structure shows it's as clear as day that the structural top was in April. And we see that from many different angles. And if anyone has any questions, let me know. But I'm assuming that everyone here is up to speed on them. And if that's the case, that was not the 4-year cycle playing out, whereas we peaked in this area over here. Price did make a higher high here in November, and it made it, this is lined up. I'm sorry, I'm throwing you off a little bit. It's not the best chart to be looking at. But as far as 4-year cycle expectations, it was generally peaked as many days after the halving as the 2016 cycle. It was within like 20 to 30 days. It's very close. If you're viewing this as a new structure took place and that we actually did not see the 4-year cycle play out, that we did not see lengthening cycles play out, that we saw a shorter cycle. Because if price peaked in April, or if the market structure peaked in April, that was that was a lot shorter of a cycle. And if that did occur, this is just interesting. And I think that I personally like to consult this view here, is that right here in this area is also where we do have capitulation, approximately 12 months after that last high. And you could see if I draw a box, like you have the 2012 cycle, the 2016 cycle, and, is it possible that we saw over the weekend some type of capitulation? I mean, I myself and all of you, I don't think anyone is comfortable saying that, and none of us should be. I see, and it's too soon to know which is correct, but I would not be surprised if that we put in this area interim bottom. That's not to say even this week we don't even take out that low we put in around 17,500, but and not to say that we even tested. I don't know, but I will get down to price in a moment with you. But it is possible then we move towards a little bit of a relief rally. When I say relief rally, I'm not talking about a rally that is bear market rally like we saw at the end of March where the rip is sold, but I'm talking about one taking us into the end of the year. And if all that's happening, I vote more towards a new structure. And even more towards a new structure is because I don't know what type of headwinds 2023 brings. We gotta take it day by day. Look just a little bit ahead of us and not try to forecast what is going to be happening 6 months from now in this environment. It's too much of a data dependent environment. Anyway, David, I'm just taking a look at, there's a good comment because you're talking about the mini bulls and mini bears theory possibility of being dead, but I can't rule it out yet. Let's start this off. Let's kick this off with just taking off the no lines and add some lines over here. And this has served us really well. What do I mean by that? All right. Markets coming off in the last 12 days or so significantly. That's 40%. Some might call that capitulation. Most, because of the massive fear and uncertainty out there, are unsure. And that's a fantastic view to have. How could anyone have any type of certainty at this particular point, right? Well, when I talk about certainty, I'm talking about the macro. The Fed is obviously continues to tighten into a slowing economy. It's very worrisome. They're doing it because of inflation. Now, I wonder whether or not we are going to be seeing inflation come off. I'm watching very closely the oil market. I'm watching very closely bonds. And I'm looking for them to give me the clues. We'll look at the TA in just a moment and do our best to make sure we are able to stay on the right side. But prior to that massive breakdown, there's no question right here at CTM, we focused in, we made sure that before price broke down, we were watching what our downside risk was. And that was mostly to prepare ourselves mentally. It's very important. A lot of people out there are kind of floundering about. We want to maintain as much awareness of the situation around us as possible. This trend line that we drew in, you all remember the work, it was very recent. It was the week before last. And we connected the high over here in September 2019 to the high in April, cloned it off the bottom of March. And we were looking after that last touch over there. We could not really let that pass us. And we were using this as the level we pointed out at 27,000. If we broke below it at that point, we could be looking at lower lows. That was the last de-risking point gave, right? And we've been very good about that. We've given 53,000, and we gave it ahead of time. It was a similar fashion. The right before it happened, in those 2 sessions before, we put in the work. We did the work. This came off log. You're looking at linear right now. And then again, we did that also at 35,000 and 27,000. As we flip around, eventually, Bitcoin is going to flip around. You all know that, right? And as it does, we will be making sure that as we reclaim all important technical levels, we are aware of them in advance as well. One other thing that I want to point out on this chart over here, let me just jump down over here, zoom in a little bit. And I'm gonna leave these lines as they are. Hold on one second. Where are we looking for? I'm on the 8 hour. Just let me jump over to the daily just so I can zoom out a little bit, right? If I play around, if I want to just see where that touch landed to afterwards, because I want to continue just having the opportunity to just look all around me as often as possible to make sure that I don't get like blindsided about anything. I want to make sure that I'm able to see what's going on around me. By lifting this up a little bit and touching that over there, I just wanted then to check, like, was there any, like, is that line anything? And yeah, that for sure, there's some nice touches over there. And again, this will play throughout. If price were to jump down like to here, like 16,000, and then I looked and I said, well, what's over there? And it could be off of that line over there. It's just the symmetry that the market offers. So I don't feel the need to kind of leave it up like that. It's fine as it is. It was just some type of awareness. And then if I look on a smaller time frame, what I could see that happen though is right now, just let me come back to the auto over here. Like you could see as we're bouncing over here, look what happens. That line above that we have over there, it is providing resistance right over here in this area. We still need to reclaim on the upside, by the way, as far as we're talking about upside. I want to look at that really briefly with y'all, just so we have that awareness at all. But if you remember when price this day over here in May, it was May 12th when we really had the Luna collapse and we saw that massive volume day and price come down. And at that point, we were basically like, you know what? Let's see if sometime around September, we're trading around 32,000 or above. Now, with this little bit of, y'all remember that. If you do remember that, just hit a thumbs up. I certainly remember it. By going off of this trend line on the log scale that we broke, it's going to be in that area. Here's September, 32,000. So now it's a little bit higher. We're going to want to reclaim that area. It's coming in around, let's just call it, 34,000 in order to say, all right, we're feeling and doing a lot better. There's many days between now and then. We're talking about 60 to 90 days or so. And what happens in those next 60 to 90 days, obviously no one knows. It is true that really, when I put my pulse on the market right now, I see a lot of people really, really bearish. We know that, like, if you listen to Preston, love his work. He's surprised. This is going 2 weeks ago. He's surprised nothing broke yet, and that was his thesis going back over the last couple of months. He was just looking for things to break any day. And here we are. And you know what? We're seeing like lots of sign of distress in the markets, whether or not you're looking at what's happening with the Japanese yen. We're watching the Fed with a 75 basis point hike, really running behind, doing their best to just maintain any type of credibility. And really what it all comes down to is what happens over the next couple of months as we move towards September and what the data presents to us. That's why I'm watching oil. Oil has been, we'll come back to these lines in 1 second. Let me jump over to oil really quick. If I could get a chart, I want to go through it all in order, but I'm jumping ahead. I'm watching what happens in oil over here because right now energy is accounting for a lot of the last CPI print, the hotness in that print. And if we could see that this price comes down even further, so far right now, you can see where my mouse is. This is an important level, actually. This is an area of support that you see my mouse, you see the crosshair, let's call it 107.75, 108. In that area we're at right now, we're looking at some type of support. Price would need to break below that. And then also down over here, we have a little bit lower. It's right around the whole number 100 level. And if we were to see those things happening in the next couple of months, that would be a good sign. That would be actually a sign that would leave the opportunity open, I believe, for the Fed actually to back off a little bit in September. Now, the opposite could happen as well. I'm watching both oil and bonds very clearly. And if I just jump really quick over to the 10-year, you could see that right now we are running hot and high. And this is nothing. This is nothing but a blip. But I have this line over here. And this green line over here, if we were to break that trend line, at that point, I would be very interested to watch the price action, right? And to see whether or not we have actually a waterfall down or it's a nothing. And price just kind of like, this could be worrisome if price kind of just floats and consolidates, because then it could be getting ready for another big move up. And that data could go either way. We could continue to see actually that inflation becoming sticky. And at that point, if that happens, that the only response we're going to see from the Fed, it looks like, is to be even just continue with those 75 basis point hikes, maybe even talk the market that they might be doing even higher, 100 basis points. And obviously, things could really spiral out of control in that overbought direction, right? We could see yields go up. So, just to let you know, we're at a really important inflection point. And it is true. I know that probably people don't want to have this conversation yet because I see this morning a podcast talking about hyperinflation coming, and potentially that could be right if we see that the Fed has no choice but to go ahead and to start to start easing into this hot inflation. Then all of a sudden they could lose control very quickly. We saw today, or I saw headlines today of the Bank of England saying that tightening is actually causing inflation. They might not be wrong about that either, because there's no way that, but when I say they might not be wrong about that, what I mean is that when you're going ahead under these circumstances, that we all believe here that first of all, the root cause of the inflation began with the massive expansion in the balance sheet. It was then the fuel thrown on that fire was the direct stimulus handed out by the government. That include, to families, that included to individuals. And then you also had all those PPI loans, massive amount of fuel thrown on top of that. And then that, in our view, kind of probably broke or had had to do with a big disruption in the supply chain. That has now been exacerbated by World War III taking place and this new structure being born out. So it's like, for sure, the perfect storm, but I'm not falling asleep. I'm watching all things. What I mean by that is that it is possible that these deflationary pressures, which if you listen to any along the lines of Jeff Booth, and he talks about how technology is deflation and the central banks have been fighting this massive force. That gave them the ability or the hubris to go ahead and actually facilitate these policies, and maybe their timing was off a little bit. We have to stay watch. The reason I'm pointing out the alternative view is because right now the prominent view is that we are just headed towards the apocalypse. And it might not be so. It might be this summer. A lot of people even looking for the market to bottom out at some point, potentially this summer. You know what? I mean, you just got to be a little bit of flexible. If it happens in June, July, and or August, I mean, anyway, June's included. And that's my little overview as we get going this morning. With this in mind, though, and just noting that, hey, that did a really good job. Let's look at what that looks on the other side. And we had this view over here, this inverted a chart of Bitcoin showing inverted. We were looking at that ascending triangle, and sure enough, after breaking out to the upside, right, this is when we're tracking it. Price just it did kind of what was expected, and I'm not talking about any targets or anything like that. So what happens if this line breaks on the downside? This over here is very easy. This is our conservative line. At that point, that's going to be signaling to us, that's this line over here, that's going to be signaling to us that things are looking a lot better. From this vantage point, it looks like this is linear, not log, that actually we're looking at, we talked about, I would love for us to be above 32,000 come September, and that would be a breakout of the conservative line. That could be a lot lower. It's different on log, and when I say it's different on log, it's much higher as we just look at. I have to like, it seems to me log has been a lot more helpful ever since 53,000 and on 27,000 log scale for these important trendline breaks. I've been very consistent. Like, I consult them both because I really don't know which one is right. So I want to have as much information as possible. But reassessing here so far, log has been the one that has been giving the tighter signals. That's a mental note for everyone. What's also interesting, did you see this was pointed out? I can't remember who pointed it out right now, and I have it in the Discord, but just pointing out, when I looked at the most important trend line in crypto, it was done on linear. if you move to log, which I never looked at it on log, I always looked at it on linear. That's what I was doing. As soon as price broke in May 50,000 and price broke down over here, no one knew what was up. I'm like, I don't know either. So what I'm going to do is draw this line over here and wait for clarity. And that gave us a lot of clarity. But look at this on linear over here. And you could see just connecting these 2 points from on the daily time frame, extending it out. You had that retest in that area, what we called at that point the bottom of wave 1. And then that's where we bottomed out again. I think it's cool to consult it. I'm glad someone had the foresight to bring that up. Tanya, that would be the death of everyone. A long consolidation over here and more legs down could definitely happen. At the same time, as we're pointing out, this conservative entry we have over here, what is a black diamond entry. It's very clear. It's very apparent. We want to see price getting above this area. And what's interesting right now, just 25,000, which is coming into that area of resistance. I feel like that's what a lot of people who are bearish on the markets are waiting for. They're not going to continue selling into this down move. Now, what's interesting about that is that you do see a lot of new people taking heavy leverage positions. And just like all the longs got wrecked, all the shorts just on this one little move up, this one little tiny bounce, you saw massive liquidations taking place on the short side. I think the smart shorts, those who are smart, are actually waiting for a little bit of a bounce, probably towards that 25,000 level. And that would be a good area if you're bearish to look to attack in. Good session, strong session, everyone. Thanks for being here to put in the work. But before we do, I'm going to go ahead and make sure see if there's anything else you all want to talk about. If there's any questions, anything at all that you want to talk about, go ahead and let me know. Be happy to cover it right now.